Good, thanks. Thank you. Welcome to MDAs, and I'm going to explain um, how they work. And for those of you who don't know me, who I am, and also a little bit about currencies and how I trade. Yeah. So with Olive Financial, they're the licensee of the MDA. I'm just a registered trader with them, and whilst the fund is um, effectively minus it's actually under their license. So they're the licensee, they're the one with the AFSL, and I'm a registered authorised rep underneath their license. So as always, you're reminded that past performance is no guarantee of future results, and you should assess whether the advice is appropriate to individual assessment. So and needs. We will go through that in the account opening procedure. Scott over at Olive Financial will go through that with you. So this is, he'll explain all of that for you when you contact him anyway. So tonight we're just going to go through who I am, why I prefer trading currencies, what FX is, and then what MDAs are. Some of the FX web pages I use, and what the strategy is, and finally how you can get on board. I notice some of you here tonight are already on board, so thank you. And hopefully this is the first time I've actually been able to get this working, so let me know if there's any sound issues, which didn't seem to happen in Australia, but up here in Bali seems to work fine. So who am I? I've been actively for 19 years. It's 1994, so we're just gone the 20-year mark when I started on the Sydney Futures Exchange, and began trading in the 10-year bond pit for UBS, and I finished up at trading for corporations as the head of FX and CFDs market making role for MF Global in Hong Kong before they spectacularly went bankrupt. I then came back to Sydney and assisted Knowledge to Action, which is an education company based in Sydney, to start up a prop trading course, and I manage that for them. I still do manage that for them. I still trade a prop account with them, as well as assisting the traders looking for potential trades and being successful proprietary traders in their own right. I trade my own strategy, which is effectively what I teach at the prop course, and I've got to rewrite the course actually to be more in line with my strategies. That's another issue. And I do it. Yeah, I trade it every day, not only for myself. I trade it for Knowledge to Action in the prop book, and I traded for the MDA, which I have set up through Olive Financial. Also write a market report or newsletter that comes out a couple of times a week, which is on the Facebook, which I dare say most of you are aware of, and that's how you came to be here tonight. And yeah, asset manager is what they call me with Olive Financial Markets. So why do I look at currencies rather than, I've got a history in equities and CFDs, I've got a history in futures and commodities, but FX is the largest global market. You're talking 5.3 trillion a day now in turnover, so there's a huge amount of liquidity there. It is the kind of the foundation of the global economy. Everybody carries money on them, whether they're in a plastic form or even digital these days with Bitcoin. But currencies are the foundation of any global economy, and currencies are the barometer of an economy. So it's fairly volatile in that sense, and as a trader, we need volatility. It takes a long time to make money on a house. Getting 5-10% return on a house can take decades sometimes, whereas with currencies you can do that in sometimes even in a couple of weeks. Unaffected by share market events, whether a stock gets listed or or falls into a hole. It doesn't really affect the currencies. And one of the good things about that is because it's a 24-hour day, 24 hours a day for 5.5 days a week. You don't get manipulation of prices, or you don't get gapping in the market, which can really affect the trading results. The leverage on currency trading allows you to gain greater rewards for your return on investment. So your ROI is a lot higher than it would be when trading outright stocks, and it can have lower risk because of liquidity and the volatility. But leverage and risk are double-edged swords in the sense that yes, it can leverage can make you turbocharge your profits, but it can also increase your losses rather quickly. And risk. So these, the leverage and the risk that we take is something that, as any trader or fund manager would do, is their biggest part of their trading or the trading strategy is managing that exposure. So, just understanding FX. A lot of you guys, I can see, have been around the trap, so this is probably old news to you. But the majors are what considered the top 6 majors and the highest liquidity, and these are actually listed in turnover. So the number 1 is the euro dollar. The second highest turnover is the dollar yen. Then we've got the cable, which is the pound versus the US Aussie versus the US. It comes in at number 4. Dollar Swiss, and then dollar CAD. And the lower you go down in terms of turnover, so you go into the Kiwi or the Sing, dollar Sing Singapore, or the dollar New Zealand, Kiwi dollar, sorry, you tend to get more volatile markets in the sense that it'll when it moves, it can move rather rapidly, and then it sends sideways for days on end. But the top majors tend to give you more trends, and especially when you cross them with each other, such as the pound versus the Aussie, you can get some fabulous trends going. So the euro dollar is the world's most liquid pair, and yeah, it's currently affected by the southern states of the European Union, such as those in the Mediterranean, and compared to the northern states of Sweden and Norway. The Germans. When we come to the dollar yen, it's what's considered a defensive or safe haven pair, where money will go into the Bank of Japan or the Japanese bonds, in terms of looking for a safe haven to get away from volatility. People will go into the dollar yen. But it does have a lot of intervention by the Central Bank of Japan, the BOJ, so you need to be careful of that, and obviously keep an eye on developments that are happening in their economy to understand when or why the BOJ may step in to intervene on the currency. Cable was literally known as the cable because of when they first started the first trade on it, was by cable, underwater cable between New York and London. Currently affected by QE initiatives. Well, yes, you've got a couple of forces going on in the cable. You've got the US tapering, which is pulling back on their QE, and you've got the BOE is currently still got their asset purchase program in place, and but it's a slightly different design to the Americans. In fact, I think it's a better design than the Americans. It means that money actually does get down to the man on the street, whereas the Americans, it doesn't, and I think that's having a detrimental effect to the American economy, whilst the UK economy is going very well. Dollar Swiss is also a defensive pair, known as a Swissy. It's the reason because this is a defensive pair is the Swiss national banking system, where people park their money again in times of geopolitical tensions, because the Swiss banking system is renowned for its discretion and its stability. We then come into the commodity pairs, which the Kiwi is also considered the commodity pair, but we've got the dollar CAD. As I said, it's prone to unpredictable spikes. And then you've got the Aussie dollar, which is currently still got the highest yield out there out of all the majors. Well, actually no, now the Kiwi's got a higher one. But the Kiwis are minor, so it's okay. It's still very high yielding. We've got a safe, stable government, and a reasonably strong economy, still doing 20 years of growth, plus 20 plus years I think it is now. And again, yeah, it's a risk on, risk off, a bit like the Swissy and the yen. It has started to become a safe haven currency pair. So during times of turmoil, you'll see that the dollar will, the Aussie dollar will strengthen in those times. So that's a brief rundown on the currency pairs. On the majors, we'll understand what a pip is, but in terms of using that in with MetaTrader, for example, is a trading platform that a lot of people use, and I have 3 different accounts with MetaTrader, with 3 different brokers. And they work in what's called micro lots or mini lots or standard lots. It's effectively 10 cents per pip, a micro lot, or the face value is $1,000. Therefore, a mini lot at $1 per pip is the face value is 10,000, and a standard lot is 100,000 face value, or $10 per pip. The platform that this MDA operates through is IG Markets, based down in Melbourne. It's a London company. It's one of the original and certainly now the largest FX CFD provider in the world, and they use a slightly different sizing. In the lot size is based on 10,000 face value, and they work it on the face value rather than the micro lot, mini lot. But if somebody asks you what a micro lot is, you'll know that it's 10 cents per pip, or in MetaTrader speak, it's 0.01. So how is FX priced? Well, you're always one currency pair against another. The secondary pair is the term base currency, sorry, and so all the P&L will be in that particular currency pair until it gets converted back to the account, whatever the account is in. The account's obviously going to be in Aussie dollars, for it's based in Australia. But if it was in US, you'd be making the P&L on this trade in Aussie dollars, but it then get converted back to US dollars. Similarly, the dollar yen is all your trades are P&L is in yen, and that gets converted back to Aussie based on the Aussie yen rate at the time of closing the trade. So with most currency pairs, not all of them, most currency pairs are quoted to the 4th decimal place. There are some out there that are quoted to the 3rd, and all the yen pairs are quoted to the 2nd. So when we're talking about pips, as success is measured, we measure the trade in pips, because how much money you put on it will be determined by your risk parameters and how much is in your account. But if you just focus on collecting pips, then you should be focused on the 4th decimal or the 2nd decimal when it comes to yens, so you can judge how your performance is going. So we can see that it's with the concept of leverage, that it's highly effective to $1 a pip or $10 a pip. That kind of leverage is to turbo boost your earnings. So the benefits of FX in summary is that it's inexpensive to trade. Generally it's the spread on the trade is the commission, but with this particular fund we have a flat rate of commission on each trade. The size of the market gives us the reliability that we can get in and out of the market at any time we need to. Obviously, in a fast-moving market, you can be slipped out of a trade. Slippages when in a fast-moving market you might want to get out at a certain price, but that price doesn't exist because of the pace of the market. Literally, is that the brokers have pulled their bid, and you're trying to sell, and they just keep pulling their bid because of news. Generally, you'll see that over news announcements such as a central bank announcement on the move in interest rates. However, you don't have to wait until 10 o'clock when the stock market opens to get out of your trade. Unlike currencies, you can do it at 24/7. With the size of the market and the volatility and the liquidity in it, it gives us a longer-term profitability. Being 24 hours, you've got the convenience to always access the market and protect yourself if necessary. If you've got any questions as I'm motoring along here, guys, just type them out or shout out. Okay, so what is a managed discretionary account? It's an asset management tool that trading specialists such as myself can make the decision for you if you don't have the success rate or the time to dedicate to trading, because successful trading is not about just logging on for 10 minutes a day. It literally is a lot more in depth than that. And to make those kind of decisions, using a managed discretionary account can benefit from my experience and Scott Morrison, who is he looks after all the trading at Olive Financial Markets, but he sort of is my backup in terms of trading decisions. Another advantage of managed discretionary account is that you own the account with the broker. Okay, so you create the account with the broker and links to the what they call via MAM, or I think in this case it's a PAM, percentage allocated managed account, gets linked to your account with the broker. So you own all the money in there. It's your discretion. You can pull the money out at any time you wish. So there's no long-term contract, unlike a hedge fund. You can see all the trades on your account. I don't think it shows you the stop loss on it or the target price on it, but it certainly shows you. You can log into your account at any time with IG Markets. You'll be able to see the trades in there live. You do also get daily statements, but I think you can also set it up that it emails you when a trade goes through. So when I place a trade, when it gets executed, it sends you an email, so you go, oh, okay, there's a trade on, and you can log in and have a look. All right. So your funds are fully accessible at all times. Obviously, I'd like an email to know that if you've withdrawn your funds, just as a heads up. The way the system works means, I'm always creating an order based on the size that I expect to be in there, and if somebody's pulled funds out, then the order will be rejected, and I'll have to go work out who's pulled funds out. And so I'd appreciate it if if you want to pull your funds out, that's your money, it's your prerogative. But just let us know that it's happening. So for the other guys, your funds are not pooled with the managed discretionary account. They may be pooled with the broker. You might want to check with the broker how that would affect you. But if with an MDA, if I lose 1%, everybody loses 1%. So it's not as you're not affected by what another person within the managed discretionary account does. You can, or you should be able to trade on this account yourself, I believe. No, I don't think you can actually. You can only play, mirror, it's basically mirror the trades that I'm doing. So it's just an asset management tool, as I said, where you can, if you don't have the time of the day, but you like being exposed to currency trading, whereby you can have the benefit of successful traders such as myself, and you know, we look at 3 to 5% return a month. And I think in March March we would have got very close to it in March, of 3%. Yeah. So, any guys got any questions so far? No. Okay. So this is just a flowchart of how it works. This is where I sit, and these are all your accounts, and I log into a master platform. All good? Okay, cool. Thanks. So I log into the master platform, and I can see whose accounts there. This account can't see that account. Obviously, you can't see other people's accounts, but I can see all the accounts in there. And I create a trade on this master platform based on what the total sum of all these trades are. So if that's equal to 600,000 and I want to risk 1% on the trade, and that's what I'll do. If it's equal to 500,000, then I'll risk 1% of 500 on the trade. So then it's 1% of each account, and therefore, if I make 2% on the trade, each account gets 2%. So this is, I log into here, it allows me to log into the broker firm, and that obviously gives me access to the markets. So that's just a basic flowchart of how managed discretionary account works, which is different to, very different to a hedge fund. More about okay, I appreciate that question. I'll come to that at the end, if that's okay, Barbara. Yeah, so a hedge fund which pulls all your funds and asks you to lock it in for 12 to 24 months. This is held in a separate account in your name with the broker, and you can close it down at any time you want, or top it up at any time you want. That's your discretion. It's your account. You retain ownership of the account. Okay. Some 7 keys to know know yourself. You really do need to. It's very trading for a living is certainly makes you very honest with yourself. There's no getting away from the poor decisions. You can see that in your bank balance, and you have to come to terms with those pretty quickly to be able to turn that around. It's very much a psychological career as well as a financial career. Invest in knowledge and trading system. Yes, there are many different trading systems out there. The robots and EAs and algo engines, but even those are constantly tweaked by them, by those guys who own those algo engines to maintain the integrity in them and maintain results. But the best thing you can do is invest in yourself, invest in knowledge and understanding on the markets if you're looking to become a forex trader for yourself. Keep it simple, absolutely. The more crap you put on a chart, the more difficult it's going to get to understand what actually is going on. Do your homework. Yep. Your homework includes in this not only technical analysis but fundamental. Your first job as a trader is to protect your capital. Yeah. So you've got to manage your risk properly, and that's what we do here. Most amount of risk I'll ever take is 2% on a single trade. On my own account, I'll do more than that, but when you're trading other people's money, it's obviously less desirable to do 10% on a trade. But I won't do more than 2% on a trade. And you've got to protect your capital, and then the second job obviously is to protect your profits, because that's what everybody's here to do, to make money. Always trade according to your trading plan. Yeah, don't go changing things. Certainly don't go changing things halfway through a trade. That's just on a hiding to nothing if you choose that option. And yeah, keep a trading journal so you can monitor your performance and look for improvements. Different time zones. We've got the Asian time zone, which has just recently finished. Before we move into the London time zone, London time zone is generally from when Europe is at 7 o'clock, so 3.5 hours ago. And it does take about 70% of all FX transactions are traded through the London time zone. So the most active of that is the London-New York, when you get that sort of 3 or 4 hour period when London is still open and New York is closed. Oh, sorry, New York is open. So it's about the first 2 hours of the New York Open is generally the most active, and also around the London time, you'll see a lot of activity around those periods of time. The quietest time zone is from 5 a.m. Sydney time or 4 a.m. Sydney time through to about lunchtime Sydney. So the Asian time zone tends to be the quietest, although when the Japanese start to do things, the central bank can get a bit interesting. But at this, and over time with the growth of China, things may change. But at this stage, certainly the nylon session is, or the London time zone effectively is the strongest. So some FX web pages that we go to. You've got FX Street, Forex Factory, Bloomberg, and another one I like to use is Zero Hedge to get the alternative view. And as I said there, you also look at the Economist. I also look at the Telegraph in the UK, not the Telegraph in Australia. It's just a tabloid. The WSJ, and another good source, although they're starting to charge for it now, is Business Spectator in Australia. Economist also charges, but all these websites, these top four, are free. And a very important thing to be looking at is a calendar. I'm sure a lot of you, I can see that most of you guys online here are traders anyway, so you'd be well aware of this, but this can either run a trade very quickly or make a trade very quickly. And we've got a UK, just on that, I've got a UK trade on. Not that I'm going to trade, but it's on, so I might as well go and have a look at it. Because there's news coming out in about 10 seconds on the cable. And as I was saying, this is a trade that we took on the cable. And this is another trade that we took on the cable. This is the entry. And here we've got a target, and there's the stop loss. So the news that has just come out is obviously not that flash hot for the cable, although it's reversing again now. So you can see, if I take this down to an hourly chart, the volatility around a news announcement, which can make or break your trade. So you need to be aware of when these are coming out to either know when to either get into a trade or avoid getting into a trade. So keeping an eye on the calendar is extremely paramount to a part of your research for trading. Okay, so what do I do? The strategy used for trading in the MDA, as I said at the start, it's more or less what I teach the guys at the prop house. But it's something that I've been working on for 20 years in the industry. It's what they call a top-down approach. So it's starting at the fundamental level with your economic research, looking at the calendar, looking at the economic data that's coming out from countries, and judging how the performance of that economy is. So if the Canadian economy is not doing very well at the moment, you would not be looking to buy that currency. And from that fundamental research, you then start looking for technical signals that go with your fundamental belief of the currency, and identifying swing points with a confluence of indicators to pinpoint an entry that goes in line with your fundamental understanding. So you're looking from, as I said, from the top down, you go fundamental, and you're looking at your technical analysis in the longer term time frames, from monthly, weekly, and then down to daily, sometimes even 4-hourly and hourly. As I've mentioned, the maximum of single position or trade of capital at risk is 2%, and predominantly trade with the trend. Occasionally I will trade against the trend. For example, the Aussie dollar is looking like a potential trade against the trend. The Kiwi dollar as well is also looking like a potential trade against the trend. But predominantly more money is made going with the trend, and so therefore it's not about a lot of trading on trading for the MDA. Those of you who will have seen me trade before know I'll only do maybe 5 or 6 trades a month. Sometimes a busy month will be sort of 20 trades in a month. But for the month of March, which is just shy of 3%, I haven't done the figures yet, but I looked at about 4 or 5 trades for the month of March. So it's not about multiple trading. It's just finding those the primary entries, finding those little sweet trades, such as the pound that I've got on that you just saw. Trade management rules, yes, the primary rule is to protect the capital, and the secondary rule is to protect your profits. That's what we're here for, so with the trailing stops. So here you can see some trade examples. This was the pound that we took. There's a nice little swing point there. This is on an hourly chart for euro dollar, identifying a nice little swing point there and getting out as it's retracing. And this is the Swiss yen that I created this this PowerPoint pivot thing a while ago. So Swiss yen, that particular trade, there it is there, got in there, and it didn't take off as I was expecting when I expected, and so we got out of the trade, and then it decided to take off. But hey, that's taking off again now. That kind of stuff happens. So, setting up an MDA. This is, you can email either myself or Scott Morrison. As I said, Scotty's looks after all the dealing for Olive Financial Markets. They run several MDAs under their umbrella. And if once you email us your interest, we'll get the documents to you, where you need to go, the links to establish the trading account with IG. Obviously, you deposit your funds. Once the funds are deposited, IG will automatically connect it to that master account, which, as I suggested, is what I showed you in the flowchart. And then the MDA manager, which is me, trades on the master account, which is percentage allocated. So it doesn't matter whether you've got 10,000 or 100,000 in there. If I make 1% on the trade, your account makes 1%. It's not like the bigger the amount, the more you make or the less you make. It's percentage allocated. Okay. So that's about it at this stage. I'll open it up to question time, and I have one here that says, how does it work? What does Olive take? What percentage do I take? And okay, so it's with the Olive Financial Markets and I have an agreement of effectively 50-50, but it's the performance fee obviously is only payable. There's 3 fees, right? There's a management fee of 2% of the account balance, which is annualized. It's paid monthly, but it's annualized as 2% per annum. There is commission on the trade, which is $7.50 per 10,000. Per $10,000 the size account. So if it's a $20,000 account, then it's $15 per trade. And the performance fee, which is 30%, is taken out only after all costs are obviously taken care of. So that's the percentages. We've got any other questions? Come on, guys. Home and away is finished now, isn't it? No other questions? Well, did the chart you send have these taken? Did the chart you send have these taken into account? Did the chart you send? What chart? Oh, the Facebook chart. The Facebook chart is this particular MDA has been trading since November. The figures that I've put up on Facebook are effectively my prop trades, but since November, the trades that I've been doing on my prop account have been reflected in the MDA. So yes, that spreadsheet and / chart on Facebook is the results the MDA has been getting. Yeah, you can email Scott and or myself, and we'll get you the terms and conditions, the contract, the SOA, which is statement of advice, all which needs to be completed. If you email us to us, I'll get you. Do the fees cover the brokers? Yep, the broker makes the spread, so we don't get the spread. The broker, that's where they make money. So if there's a 1.5 or 2 pip spread on the trade, that's the broker's part. He doesn't get anything else. The mirroring of your trades you mentioned, is that an extra fee if I have an MDA? No. If you have the MDA, that you are mirroring the trades. Right? If you have the MDA, as I said, where is it? If you have the MDA, where is that? No, back this way. Okay. Stay on it. All right. So this page here, you have the account. Whether with the stop loss and take profit, like a trade call for our own accounts, if we wish to take them. Effectively, this account that you have here, this one here, you can't trade on. It only mirrors every trade I do. I do a trade here, and I've got one of these accounts myself, so it mirrors the trade on my account. Okay, and then Joe Blow might have an account and mirrors the trades on that account there. Whatever I do here is a percentage allocated, so the entry and exit will come into this account. You might have another account somewhere else, say with with CMC Markets or whoever. And you get an email from IG saying I've done a trade, and you go and place it elsewhere. That's fine. So there's no extra fee for having this set up except for the fees that I mentioned. Hope that sort of answers the question. Do those fees cover the brokers? Cover that? That's good. Is it possible to use an existing account, or do we need a new account? Unfortunately, I think you'll need a new one. You'll just have to set up a new one. Can the accounts be on a different currency? That is a good question. Can you email me that question? Because I believe the account is set up in Aussie, but we may be able to set it up in US or Euro if you wish to have it in US or Euro. I don't want to give you a false answer, so I'll prefer you to just email me and I'll get the exact answer, because I believe there is a possibility, but I want to know, just make sure I get the right answer for you. So if you could email me that, that'd be great. Is performance fee charged once a year, i.e. are the yearly charges at end of financial year or anniversary of client account? The 2% management fee is, I think, quarterly. It may be monthly, but I think quarterly. Commission is obviously at the time of execution, and the performance fee is it's a watermark, so we need to hit certain levels before we'll take a jump into performance. Again, if you email me directly, I'll get you those watermarks. I think it's in the contract, but I can find out for you. But it's certainly not on the. It's earliest it'll be is quarterly, it's not monthly. Are we able to see your setups? No. You can't see my setups. You'll just get an email from the broker that there's been an execution on your account. You can't see, and therefore you'll know the entry price, but you can't, whilst it's pending, waiting to be executed, you can't see it, and you won't be able to know where the stop loss and the take profit is. I believe that's the case. I could be wrong on that, but I believe that's the case. You don't see what I intend to do before I do it. But obviously once I've done it, you can then go and replicate the trade if you're quick enough and get a similar price. Okay. Well, guys, thanks for coming along. I do apologise for if you've got no more questions. I'll wrap it up. But we finally got there. This is the third time I've tried to do it for the MDA. I do this webinars quite often for the prop book, but yeah, we finally got there, and I've recorded it, so we can relive it for prosperity. Well, thank you. I appreciate that, Barbara. Thanks, Ali. It's would if you've got any interest, just email us. Otherwise, I'll probably be doing another one of these in it'll be exactly the same as what I've done today anyway, in a couple of weeks, to generate more interest. But I appreciate you stopping by and taking the time out of your evenings to listen to me dribble on about it. You guys enjoy your Tuesday night, and how's our little pound trade going? Swiss yen is looking well. No, not doing much. It's all quiet on the Western Front. Okay. All right, guys. You have a lovely evening, and I'll talk to you soon. You know where to find me. Thanks. Oh, yeah, and if you've got those emails of those questions that you've got, that'd be great. Thanks.